As to bring you up to speed with the M&M earnings, the Q4 PAT has come in at 874 crores versus 606 crores in the same quarter previous year. So the Q4 PAT has come in at 804 crores. Let's look at the top line, 874 crores. Let's look at the top line figure as well and see if that's in line with the sales estimate. But Aisha, if you can just compare it with what our poll was estimating.
Right. Our research analyst Yasin Musa is finally with us to analyze those numbers. Yasin, disappointment on the margins for the top line has been a little better, deducting that exceptional gain of 108 crore rupees.
Well, Aisha, I think these results are something like Tata Motors. You have strong revenue growth, strong profit growth, but on the margin front, it's still alarming. If you talk about the margins, according to the copy that we have received, it's slightly blur, but still we have managed to, able to calculate this EBITDA margins that have come in at 10.33% versus our estimate of 11.1. So that is a straight 80 basis points lower than what the street was estimating. So clearly there has been some disappointment on the margin front. If you talk about the revenues and the profits, they have been exceptionally good. If you talk about the profits, they include exceptional item of 108 crores, that is a gain. So if you adjust for that, the profit will more or less be coming in line with estimates. But the margin picture has surely disappointed. And if you talk about the tractor segment, that has clearly disappointed, because we saw in March M&M had to shut down their production for tractors because of oversupply concerns and the inventory buildup that was there. So clearly there was pressure as far as tractor volumes as well as realization from tractor segment is concerned. Just to take you to the farm equipment segment, they have reported a revenue of close to 2,781 crores versus 2,700 crores, 2,700 crores and some odd figure. So clearly there has been a degrowth as far as their tractor segment is concerned. If you talk about the automotive segment on a consolidated basis, that has been driven because of the performance of XUV 500 and the strong SUV, like the Bolero and Scorpio. That performance has been decent on a consolidated basis, but on a standalone basis, the farm equipment continues to disappoint. If you see about the segmental results on the EBIT front, the farm equipment has posted a EBIT of close to 434 crores versus 475 crores on a year-on-year basis. So there has been a degrowth in both in terms of sales and EBIT performance. So the farm equipment has put some pressure on the margins for M&M, and the results are slightly disappointing on the operating front.